The markets are holding their breath. A major conference is happening in the heart of the Federal Reserve today, and it could be a signal for what's next for your money. A new economic forecast is coming out, and it's projecting a stronger U.S. economy, but with a warning. You need to know what this means for your investments. Let's dive in. Welcome back to the Frugal Finance, your go-to source for understanding the forces that shape your financial future. It's September 22nd, 2025, and all eyes are on the Federal Reserve. We'll be breaking down the key events of the day, including the Fed's Core Week conference and a brand new economic forecast from the New York Fed. We'll also look at a critical update on the U.S. government's budget and how it could impact everything from inflation to your taxes. This is a must-watch episode. Today marks the start of a major event in the world of U.S. finance, the Federal Reserve's Core Week in Richmond. This is a big deal because it brings together top economists from across the country to discuss cutting-edge research. One of the key presentations today focuses on using asset prices to measure the long-run impact of monetary policy. For you, the investor, this means the Fed is looking at new ways to understand how their actions affect the economy, and they could be looking for new strategies. We're in a critical moment with the federal funds rate, and any new insights could signal a change in policy. On top of that, the New York Fed just released its September forecast. The big takeaway? They are projecting stronger growth for the U.S. economy for the rest of 2025, but with inflation remaining sticky. This is a tricky situation. On one hand, a stronger economy is good for corporate earnings and jobs. On the other, persistent inflation could lead the Fed to be more cautious about any further interest rate cuts. This latest report revises their June forecast, showing a more positive outlook for GDP and a slightly lower, but still elevated, forecast for inflation. Let's talk about the big picture, the U.S. government's finances. According to the latest data from the Treasury, the federal government has already spent over $6.6 trillion in fiscal year 2025, with a deficit nearing $2 trillion. While this is not new, what's crucial is how this deficit is being managed. Social Security, Medicare, and national defense continue to be the biggest areas of spending. For the everyday American, this points to continued debate over the national debt and its long-term impact. With a new debt ceiling debate potentially on the horizon, it's a situation that could inject significant volatility into the markets. The message for today is clear. The U.S. financial landscape is strong but complex. With the Fed's Core Week underway, we are getting a clearer picture of their thinking, and a new forecast from the New York Fed shows a resilient economy but persistent inflation. All of this is happening against the backdrop of a ballooning government budget deficit. So, stay ready. Keep a close eye on your portfolio. For more in-depth analysis and to get ahead of the market, subscribe to the Frugal Finance. Hit that like button if you found this video helpful, and let me know in the comments what you think the Fed's next move will be. Until next time, stay ready.